Wonderful, wonderful. So as Vince said, today we're going to kind of walk through a number of things. Most of it is going to be related to requirements of your contract, things like making sure the organization has proper internal controls, segregation of duties that are normally documented and laid out in a policy and procedure manual. We're going to talk about different cost and expenditure types, things that are allowed in different contracts, and then how to record and make sure you have adequate documentation for that, for whatever expenditures you're trying to get reimbursed from the city. And then we're going to talk about contract monitoring. Let's see here. Internal controls and accounting system. The DCHS contract boilerplate says that internal control and accounting systems, that the contractor shall establish and maintain a system of accounting internal controls that complies with generally accepted accounting principles, otherwise known as GAAP, issued by the Financial Accounting Standards Board and the Governmental Accounting Standards Board, or both, as is applicable to the contractor's form of doing business. What does all of that mean? That there is a set of standards and guidelines that have been established called generally accepted accounting principles, and the county is expecting that that organizations that get funding from them follow those rules and guidelines. And then internal controls are just the policies and procedures and activities that ensure effective and efficient use of the nonprofit resources, and it includes development of policies and procedures. That definition is taken from the 2022 Washington Nonprofit Handbook, which we'll talk about a little bit more in the training later. But in a nutshell, your contract requires you to comply with generally accepted accounting principles. And most of the stuff that we're going to go through today lead back to that requirement. Examples of policies and procedures includes things like your program policies, how your programs are set up and run. Specific to this training, your accounting and finance policies and procedures. So how does your organization accept money? How do you take money in? How do you expend money? How do you account for it and document all of the financial transactions that your organization may encounter? And again, there are rules and guidelines that have been set by GAAP that govern that you should be following. Inventory, if applicable. If you are an organization that issues any type of cash gift cards, then how are you documenting the purchase of those gift cards and then the eventual handing out of those cards? Whistleblower and fraud reporting. So all this is kind of a requirement, not just at the state level or with GAAP. This is actually an IRS requirement that you're supposed to have some type of whistleblower or fraud reporting system, that if someone within or outside of your organization comes across fraud or any wrongdoing, that there's supposed to be a process in place to report and document that, and it should be outlined in your policies and procedures. Similar to client grievance, conflict of interest. Most nonprofit organizations have a board as well as employees. And so as you are conducting business with other individuals or organizations, you should have a process in place to make sure that there is no conflict of interest as it comes to things like allowing program participants into the program, or even subcontracting agreements, that if there's some type of relationship between the people within the organization, that there needs to be a process to document that and to exclude the related parties from the decision-making process, so that you don't get in trouble with a conflict of interest situation. And then, as we know, data security and client privacy is huge with all of the data breaches that have been happening. So having a policy around how client information is stored and how that information is shared to make sure that you are not breaching any client privacy requirements. And then records retention. The county contract does have a requirement that all documents and data related to the contract are maintained for up to 6 years after the contract ends. And in some cases, GAAP actually requires some records to be retained even longer than that, but we'll talk about that again a little more. So again, examples, these are just some examples. Can we just see in the chat, how many of you are aware of what your organization's current policies and procedures are around accounting and finance? Maybe put a 1 in the chat if you've seen and understand the requirements in your organization's accounting and finance and policies. Okay, starting to see a lot of 1s. Awesome. Glad to see it. Yes, great, great. Seeing a lot. So that, I think I went too far. Maintenance of records. Again, per your contract, accounts and records, the contractor shall maintain for a period of 6 years after the termination of the contract, accounts, records, including personnel, property, financial, and program records, and any such records the county may deem necessary to ensure proper accounting and compliance. So again, this is 6 years after your contract ends. You're required to still have this information on file in the event that you need to pull it, or it needs to be provided at a later date. And it doesn't have to be physical. It definitely can be digital records. You just have to have a way to easily retrieve the information if it is requested. The purpose and importance of supporting documentation. Documentation must demonstrate that the costs are reasonable, allocable, and allowable. Ooh, that's a mouthful. Demonstrate segregation of duties and adherence to the agency policies and procedures, that is within grant and contract requirements, within the period of performance, treated consistently, and again, done in compliance with GAAP. So in a nutshell, any funding or any spending that you're doing with these funds, they have to be reasonable expenses. They have to be allowable based on your contract terms, and then they have to be allocable. And we'll talk a little bit more about that. Another thing, when we talk about policies and procedures, if you have written policies and procedures, which it looks like the majority of you do, you have to make sure that you're following them, because during your review, the agency is going to ask to see your financial policies and procedures. And whatever you have outlined in there, when they pull sample documents and information, they want to be able to see that what you're saying are your policies and procedures is actually what's happening in your organization. For instance, if you say person A opens all incoming mail coming into the agency, and if there's checks, then maybe the checks go to person B to record, and then maybe they go to copy C to actually do the bank deposit. As you're going through your fiscal review, whoever's doing that review is going to want to see that those things are actually happening. So when you draw up your policies and procedures, make sure that you're able to follow them. And then sometimes it's necessary to revisit them periodically to make changes. Susan's asking, will we get a copy of this presentation? Yes, everyone will get a copy of the recording as well as these slides. Again, this just talks about the requirement for review and contract monitoring. records and documents with respect to all matters covered by this contract shall be subject at all times to inspection, review, or audit by the county and/or federal state officials authorized by law during the performance of this contract. And again, we have this 6 years after the termination. And the reason this says federal and state, because sometimes the money that the county is issuing, it may have actually come from the state or federal government, which then means they have the right to request information and backup as well. And this says at any time, but generally, I think the county does these reviews on an annual basis, unless something happens or transpires that it needs to be done more frequently. Vince, is that correct?
Yes, that's correct.
Awesome. Okay. Anybody have any questions on anything we've covered so far?
I'll name one thing. This is Valerie Segamola, the finance manager. For our county contracts, with county funding, sorry, just to distinguish from federal funding, we aim for a visit once every 3 years for our contracts. And then we also do desk review on a monthly or quarterly basis that we'll be looking at, transactions during the most recent service period. But so we do review these records with the site visits are typically one every 3 years.
Okay, thank you for that clarification. Appreciate that. Does anybody have any questions on anything we've covered so far? I know this is just a lot of wording and we're looking at contract language, nothing too exciting or fun, but we want to make sure that you guys understand again that these are terms within your contract that you're expected to be adhering to. I see Susan has her hand up.
Yes, I wanted to ask, again, I did mention I've not been through a fiscal review, but how much notice would the organization receive so that, they're starting the school year, so I'm thinking it's a good time to kind of make sure everything's in place so that we move with our best foot forward. So how much advance notice would we get if a review were to take place? You did say they were once a year or once every 3 years, I think.
Yeah, she just clarified that for it's every 3 years. Vince or Valerie, can you speak to how much notice is given before a review happens?
Do you want me to take that then? Okay.
Yes, please.
Okay. So typically it's 30 days advance notice. We are actively working to clarify guidance. There was some additional council legislation that passed that we're reviewing and understanding how that impacts our processes. But we do aim for at least 30 days advance notice if you're going to have a site visit.
Awesome, thank you. Any other questions, Susan?
No, that was it. Thank you.
Awesome. Anyone else? So this is just leading us right into the DCHS fiscal monitoring, what to expect. Normally you will get an email or a notice saying we're going to be looking at transactions for this time period, and these are the things that we want you to submit. Normally it's your agency's your fiscal policies and procedures, a general ledger for the time period in question, and then they take that general ledger, pull a sample of transactions, and ask for additional support documentation based on those samples. And so what we're going to spend a lot of time going through today is what that documentation and kind of what your policies and procedures should look like, so that when you get to the point when you have fiscal monitoring, that everything is in order and you don't end up having any findings or recommendations. Not gonna go through GAP. We kind of talked about that. Segregation of duties. And again, it's just the key to internal control activities. It is the concept of separating initiation, approval, and review of a transaction in order to prevent fraud. And that's from the Washington Nonprofit Handbook. When you cannot fully segregate duties due to small staff size or cost considerations, other ways to segregate duties might include hiring a contract bookkeeper, including board members in the process. And some organizations even have volunteers that they entrust to do some of their input and record keeping. So a lot of the smaller organizations don't necessarily have the budget to have a full-time accounting staff, but they can use an outside company, or if they have a board member that's knowledgeable and willing to take on that role, then they can get them involved in the process as well. So segregation of duties, we're going to kind of walk through what that may look like for these different areas. Accounts receivable. So again, that's money coming into the organization. And I talked about it kind of briefly. So mail coming into the organization, who is opening mail. If you happen to still get physical checks, most organizations now, their payments are coming in electronically. But if you're still getting physical checks, who's receiving mail and opening it? How are those checks being logged? Where are the checks stored until they're deposited at the bank? Or if you are an organization that can do the remote capture, where they stored until that happens, and then what happens to the check after you do the remote deposit? Who's recording it in the system, and then who's doing the reconciliation of the bank statement? There should be multiple, ideally 3, but no less than 2 people involved in that process. Similar to on the accounts payable side. So this is money going out of the organization. Where are invoices and expenses coming into? What is the approval process before money is spent? And then once it's approved, who's actually making the payment, whether it's an electronic payment or doing a check run and running and mailing out checks? Who's involved in that process? And then again, who's doing the reconciliation of the bank statement at the end of the month to make sure that those transactions are recorded and then to mark them off once they're cleared. On the payroll side, we want to make sure that employees are tracking time, tracking their hours. One of the things that I was asked to make note of is not it's not enough just to have a pay stub showing what amount was paid to an employee, but if they're hourly, then you also need to have a timesheet or something that tracks the hours related to that payroll. And then there needs to be, and again, an approval process. So timesheets are filled out, whether they're paper or electronically. A supervisor or some type of a manager should be approving them before they're processed through payroll. And then who's processing payroll, who's recording it in the accounting system, and again, who's doing that reconciliation at the end of the month. So an example of adequate payroll documentation, and I've seen this, is a hire letter that indicates what the annual, monthly, biweekly, however the pay is, salary is going to be. And then timesheets that match that based on whether it's salaried or an hourly position, timesheets that match whatever is on the offer letter. And then again, documentation that there is some type of approval. A lot of the timekeeping systems now, time goes in, and managers and supervisors can actually do approvals in the system. If you're an organization that's still doing paper timesheets, then there should be some type of a manager or supervisor sign off on timesheets, so that when it comes time for fiscal review, if payroll transactions are pulled, those are the types of things that the county is going to be asking for and looking for. And so if you get in the habit of doing that now, again, it makes for a clean fiscal review. You end up not having any findings, and you have everything, you have all the documentation you need to support the expenses for the organization. Banking, we kind of already talked about this. This is money going in and out, and then payroll, and then a month-end close. This is something that when I was doing capacity building, I helped a lot of organizations get in place. A lot of organizations use QuickBooks, and so they're recording transactions in the system, but they're not doing bank reconciliations on a monthly basis. So your organization should have some process that once a month ends, there's a process to make sure that all of the income and expenses for that period are recorded. If you have credit cards, any credit card transactions are entered, and then there's actually a process that you can go through in just about all accounting systems to reconcile accounts. So we want to make sure that that's happening on a monthly basis. These are all, again, standard GAAP requirements, generally accepted requirements that you want to make sure that your organization is following and adhering to. Kind of already went through most of this. So again, payroll, there's some type of approval for the document, for the item that's being purchased. So a pre-approval that is reasonable and allowable per the per whatever your contract is. And then bank reconciliations are prepared monthly and then reviewed by someone other than the preparer. That's something I didn't mention. So it's not just enough to do the bank statement. I mean, the bank reconciliations or the credit card reconciliations, they then should be reviewed by someone other than the person that prepared them. Then payroll, we talked about, I'm sorry, clicked the wrong button. We talked about supervisors reviewing timesheets. And then processing it in a third-party system or in an in-house system, and then making sure that it is uploaded into the accounting system. This is an example of what a two-person team might look like. So the accountant or bookkeeper might write or do check disbursements, and then an executive director may receive the bank statement directly and review all transactions. So, and please note that says receive the bank statement unopened and review all transactions recorded in detail. Whoever's reconciling bank statements. So if the accountant is reconciling the bank statement, then executive director or someone, and these are just example positions, it doesn't have to be someone as high as an executive director, is signing and mailing checks. Whoever is recording receipts and disbursements in the accounting system, someone else should be making the bank deposits. Example of what a three-person team might look like. So someone's writing checks, someone signs and actually mails the checks, and then someone else receives the unopened bank statement directly and record the transactions. And I'm going to say the unopened bank statements piece is important. I had an instance where an organization, unfortunately, their one of their staff was able to embezzle a great amount of funds because they were doctoring bank statements. So the executive director and the board, they were getting what they thought were legitimate reconciled bank statements and had no indication that there was a problem. I don't know what the first red flag was, but then somebody went and actually pulled bank statements from the bank and realized that the person had been altering bank statements. And yeah, it was a whole big thing. So it's important that whoever's I guess, in charge of reviewing bank statements, that they either one, have direct access to pull it from the bank themselves, or if you're still getting a mailed bank statement, that that person gets the envelope unopened, because that would mean it hasn't been tampered with. I mean, this person went through a great deal of trouble doctoring bank statements for a couple of years before they were found. Let's see, what is your recommendation when all bank statements are received electronically? Again, that you have, I mean, to get them electronically is fine, but again, to pull them yourself. Don't allow someone else to download or retrieve them and then send them to the intended party. That you need to pull, whoever is responsible for that would need to pull that information themselves. Any questions on any of this? I think this segregation of duties is usually a challenge for some organizations, especially around smaller organizations that are still growing and trying to establish capacity. Finding ways to make sure there are multiple people involved in this process can be a challenge. We have any questions about this, or even any creative ways that your organizations have found to deal with the segregation of duties? No, and no questions? All right, well, we will keep going. Now we're just going to talk a little bit more in depth about internal controls as it relates to procurement and spending. So again, this is money going out of the organizations. We talked about this already, a formal pre-approval process, whether it's a document saying a physical or an electronic document saying, hey, we have this going on and we want to buy this from the program, and getting some type of pre-approval before money is spent. There are systems now, there are electronic systems, expense management systems that actually allow this to be done electronically, where program staff can put in requests that managers can review and approve. Once they approve it, then it goes to someone in finance to process that payment. Or if it's something that maybe a program manager or someone is buying on a credit card, then they have the authorization and the documentation to support buying that item on a credit card. But we want to make sure, for some organizations, if they usually budget, if it's an item that's ongoing, that's been budgeted, kind of a blanket approval at the beginning of the year is adequate, so that you're not doing the same thing every month. It would just need to be updated if the amount changed. An example of that might be staff cell phone payments. That's or rent. That's an ongoing monthly amount that likely doesn't change unless you have a rent bump in the middle of the year or whatever. But again, that should be planned out in your budget process. So there is a way that if it's recurring, ongoing things, that you can do a blanket approval that would only need to be adjusted if the amount changed. Approve and track credit and debit card use. Again, if you have that pre-approval in place, then by the time a credit card or debit card is used, it should already be approved and documentation should be in place. One of the things that came up in discussion, and we will revisit a little bit, but I want to just mention it here, is some organizations that staff don't have credit cards, so they will buy and preload the gift cards, like the Visa or MasterCard gift cards, with the intention of using that for an outing or event or whatever. And the note on that is, so say you buy a $250 card, but you only use 230 of it, then you can only bill the city for the 230 that you actually use. You can't bill that additional $20 until you actually use it. So it's not just, well, I spent $250 on the card, that's $250 out of the organization. You have to be able to show that the entire $250 was used on the card, or just bill for whatever was used during that month, and then bill for the rest of it later down the road. And again, we're going to talk about that a little more when we talk about debit and credit, when we talk about gift card purchases. But that was an example that they wanted to make sure I mentioned. Let's see, I'm trying to see, what type of approval process do you recommend for a card used by the executive director? Oh, that is a good question. Most of the time that is, I mean, I would say most of the time there's not necessarily a pre-approval process in place for that. But someone definitely should be looking over and approving the executive director's credit card charges. So I mean, I've seen instances again where program staff doesn't have credit cards, so everything goes through the executive director's credit cards. The accountant reconciles the credit card, but then it goes to the board, someone at the board level to take a look at it. Absolutely. If there is a situation where there is maybe like a director of finance or a CFO in the organization, then to have that person review and look at the transactions would be adequate as well. But even with the executive director, you absolutely want to have someone else looking at those transactions. Again, not necessarily I don't know that there's always a pre-approval for that type of stuff unless it's a large purchase. I do have some, I've seen some organizations where non-budgeted items over $5,000 have to get board approval. So in that case, the executive director would have to get approval from the board before they do that transaction. There are some organizations where things like any check or payment over 10,000, anywhere from 10,000 to 25,000 required dual signature or dual approval. So not just one person could approve it, two people had to be involved to approve those types of transactions. Again, a lot of this stuff is subjective and is going to depend on the size of your organization and the requirements of your board. And this is something else I will say, that your board should be familiar with your financial policies and procedures and should approve any changes or corrections or updates to them. Because ultimately, and a lot of times the board members don't realize this, but ultimately your board, in partnership with the executive director, is responsible for everything that goes on in the organization. So any changes, major changes or updates to policies and procedures, whether it's financial or even HR related, should go through your board of directors. Hope that helped. Tracking gift cards purchased and distributed. This is a big area of I don't know, concern for a lot of organizations, because a lot of organizations were not doing this correctly. This is an example. I believe the county has a template. If your organization doesn't have a current gift card tracking log, I believe the county has a template that they can share, and I'll also be sharing an Excel version of this. But the things that need to be recorded if you're using gift cards, whether you're giving the cards to the participants, and even like the example I gave earlier, if you're buying the card and then using it for an outing or an event for the participants, this is the information. You need to record the card number, the type of card it is. So, you know, if it's a store card or if it's a Visa or a MasterCard, the value, the date that you purchased it. And so you see here, this person, they must have purchased like a series of them on the same day. The initials of the person, the staff member that purchased them, and then the date that they were given out. I will say that best practice is to buy them as close to the disbursement date as you can. That way you're not having to worry about storing them and locking them up and maybe having them having them accessed inappropriately, or coming up missing or whatever. So if you see they purchased these on the 25th and handed them out on the 27th, and then the reason, these all say flexible financial assistance, because that is all that was required for this particular example. But your reason should be so like the Safeway and the Fred Meyer, the QFC, those were food, so food for family. If it's an instance where you have a prepaid card that you use to take the kids on a field trip or whatever, then the reason needs to be, took kids to Woodland Park Zoo, this, use this for admission or whatever the reason is. So not just something as generic as flexible financial assistance. It needs to be a little more detailed and descriptive. And then the recipient information. So initials, a client ID, and then some acknowledgement from them that they actually received the card. And that's big. That's another thing that often was missing. There was nothing from the recipient. There was no signature from the recipient saying that they actually received the cards. And so that causes problems for organizations when they're going through fiscal review. So we want to make sure it wouldn't necessarily be on this log. It might be on, it absolutely could be if this was already printed out, but it could be on another document. What I've seen a lot of organizations do is take a picture of the card and put it on a sheet, and then have the recipient sign that they actually got that particular card for this value on this date. So that's a great habit to start. Let's see, any more questions in here? Any questions or comments on gift card tracking or anything we've covered so far?
Yes, this is Heather Abidi from Open Doors for Multicultural Families. Thank you very much. So the last thing that you have mentioned is that some, let's say, case managers, program managers, when they take a screenshot or maybe they copy the gift card and they ask the recipient to sign it on that day, is that acceptable?
Yes.
Okay.
Yes. To have them sign the form saying that they received the gift card. Yes.
Okay, so there has to be a form with a copy of the gift card. Is that what you are saying, or just the gift card copy?
I don't think that the copy of the gift card is a requirement. You could just have the gift card number on there. I've just seen organizations starting to do that. It's just an additional step and additional assurance that that person got that particular card.
Okay, yeah.
Yeah, so there's no requirement that you have a copy of a picture of the card and have them sign for it. It
Yeah.
could just be the card number, and then
Yes,
you
yes.
have them sign the form for it.
Yeah, yeah.
Yes.
Because the Amazon gift card codes are actually just codes. There is no actual card.
Ah, yes,
Yeah.
yes, yeah. So that's different. Yeah, if it's a digital card, then yeah, there wouldn't be a way to take a picture of it. But you could still have the card number and have the recipient sign that they received it. Yes.
Thank you very much.
You're welcome. Ebony, you have a question?
Yes, thank you. I'm wondering about electronic cards as well, and if things
Mhm.
were sent from Starbucks or from Chipotle directly to the email address of the recipient, would that kind of paper trail suffice? Will we be able to print that out and put it in a file showing that they received it, or if they emailed back saying I received it, as opposed to needing an actual ink signature from the recipient?
Yes, something that acknowledges that the recipient received it. So yeah, I would think that that would be sufficient. Vince or Valerie, do you guys want to chime in there? Is that correct?
This is a really great question, and it's something that we are trying to develop guidance for right now. The contract language as states says that we require a signature from the recipient attesting to their receipt of any cash value card, virtual or not. Certainly if they were earning it from some kind of in-person activity that you could capture signatures, that's ideal. We do understand that there's virtual programming and sometimes virtual then cash card delivery. So we are working on guidance for that. I would say in the interim, if there is a way to get any kind of attestation, an email or something, that would be ideal. And then if not, I would say I would encourage you to work with your program manager for your contract to document. If you're not going to have a signature for some reason, work with them to get that documented. There's in the contract language around if there's any exception to following all the A through Z of the credit card log or the cash card log requirements that you need written pre-approval from the county. So I will name that as well. You should get written pre-approval if you cannot collect a signature for a virtual engagement.
Okay. Great. Thank you for that. Thane, you have a question?
Yes, thank you. I was wondering, do the gift cards have to be like 20, there's like a limit, it's $25, is the highest amount you can give in a gift card? That's the first question. The second question, will initials be sufficient, or does it have to be the full signature on the tracking log?
I will say back to the question about virtual, if you can't get a signature, get pre-approval from the county. If you're collecting only initials, that this covers you for that. And then for the limit on the cash card, I mean, I think it just depends on what you're doing. There's no set cap on cash value card reimbursement or stipends or activities or incentives. However, it will be subject to the reasonableness test. Was this incentive or stipend or whatever you are issuing reasonable for what you are issuing it for?
Okay, so like a $50 one, if it's within the reason, then that would be okay.
Yeah, I would encourage, if you have questions or concerns about that, definitely reach out to your program and project manager, explain what you're doing, and they can support you.
Okay, and so the initials, having the person just place their initials is not sufficient. You're saying you need either a full signature or an electronic signature. Sorry, I didn't quite hear that.
Yeah, so the contract terminology says that we require a signature, And then
Okay.
it says if there's going to be any deviation from these, collecting all these requirements, you need written pre-approval from the county.
Okay, so full signature. Thank you.
Yes. Oh, I thought there was another question, but it looks like she took her hand down, so maybe it was answered. Okay. Thank you for helping with that, Valerie. Let's see. Next, we're going to talk about how to create financial policies and procedures. Again, there is language in your contract around the requirement to have written financial policies and procedures and the types of things that should be addressed in there. Specifically, the budget, there's documentation around financial statement submission and whether you can like submit financial statements in a 990 or or if you're required to have an audit is based on income. I'm actually share the contract language on that in just a second. I'm gonna actually pull that up. Give me a minute. Where is that? So this financial report submission, the contractor is required to submit. Oh, actually, I don't think this is the one because it doesn't. Oh, it does. Is required to submit a financial reporting package as described in sections A through C. All required documents shall be submitted via DCHS contract lifecycle management system. But what this says is based on your gross revenue, so under $3 million, you're supposed to submit your 990 to the county within 3 days of it being filed, along with a full set of annual internal financial statements. If your gross revenue is over $3 million in the previous 3 years, then they're wanting audited financial statements. What just happened? I lost my ability to use my mouse here. Sorry, guys. Something weird is happening. So if you're over $3 million in revenue, then they're asking for actual audited financial statements prepared by a CPA or accounting firm within 9 months following the end of your the close of your fiscal year. So if your year ends in December, then they would be looking for audited financials sometime in September. Sorry, I had to do the math. Sometime in September. And something similar for profit. If you're under 3 million, they want to see an income tax return and a full set of annual statements within 30 days from filing the forms. And over 3 million, again, looking for those audited financial statements. I know recently I had a number of clients that had not been doing this, and the county reached out and reminded them that they needed to fulfill this contract requirement. And then we had to provide that information. So just be mindful again of these requirements. What is happening? Sorry, guys, something's going on with my computer and my mouse. Oh, there we go. Okay, let me go back to my presentation. Sorry about that. I don't know what just happened. Oh, let me go back. I actually wanted to go, I have a sample financial policy manual that I will share, and you guys will get a copy of this as well. So this has all of the different items that are required by your county contract. It kind of talks about the purpose of the manual and internal controls. If the organization has an annual audit, it lays that out, talks about what the annual budget process is and how financial statements are hired, record retention, talks about that, and then it goes through what the process is for their cash receipts and revenue processing. So it lays out in detail what happens when cash or checks come in, who receives it and deposits it, who does the deposit slip, who actually takes it to the bank. So all of the is not names, is position titles. That way, as staff changes, you're not having to constantly update this. But you guys will get this in a Word document, and you'll be able to update it if you need it. If you don't already have this, you'll be able to update it as it relates to your organization. One thing I want to show is this record retention policy that's in here that for some reason I can't click and go to now. I'll just scroll down to it. This record retention policy is actually longer. The gap policy is actually longer. So remember, the county only requires you to keep stuff for 6 years, but gap requires things like accounts payable and accounts receivable to be kept for 7 years. Audit reports are required to be kept permanently. Bank reconciliations and statements, 2 years here and 3 years here. But again, for the county, you have to keep those things for 6 years in case they come back. So these numbers that are in here are gap requirements. But again, you need to make note of where gap and county requirements are different to figure out which one is the longest to make sure that you're keeping stuff the adequate amount of time. Any questions kind of on the things that should be in your accounting policies and procedures? This one even has some payroll and human resources stuff in it. Again, just because payroll, of course, is one of the financial areas of the organization. The human resources piece doesn't necessarily have to be in this manual, but definitely the how often payroll is processed and things like that. It has that board conflict of interest policy in it that we talked about, as well as the whistleblower policy. One thing that's not in here that I am going to add that is in your contract, and I believe something that the county is going to start enforcing, is when you're working with subcontractors, checking the sam.gov database to make sure they're not debarred and suspended. Is something that, as far as I know, has always been in the contract language, but I don't think it's anything that's ever, I'm not going to say ever. I had never witnessed it being checked or reviewed until a recent fiscal review that I did with a client. And luckily, I mean, that particular person, once we did it, that there was no issue, but it's actually supposed to be done on the front end. So anytime that you're going to subcontract or work with an outside vendor, you're supposed to check on sam.gov and make sure they're not debarred or suspended from doing business with the federal government. And it's a relatively simple process, and then you just print the screen that shows, I guess, whether they are or not, and it has the date, usually the date on the screenshot. Has anyone on the call done that process? Are you familiar with that process? Are all of you doing that? Are you aware that that's a requirement? On my chat. Oh, okay, so some people didn't know that was a requirement, and some people are saying yes, they do. So yeah, it is. Okay, someone says I have done it, but we don't screenshot the results. Yeah, you gotta that's kind of one of the ways that you have proof that you actually did it, is to print out that screen with the date on it. So yeah. Yeah, I think this is something that a lot of organizations aren't aware of, but it is in your contract. Any questions on that? When I send this out, I'll send the link to the sam.gov site. And I think there's a little tutorial somewhere on how to do that for those of you that aren't familiar with it. But it's not very difficult at all. You just need the vendor name and some other information, and then you can do the search. Next, we're gonna go and talk about GL separated by fund source. So this is another area that that organizations struggled with when I was providing capacity building, that the county, when you're doing either your fiscal review or just submitting quarterly reports or mid-year or annual reports, they're usually asking for a general ledger for your spending for their program. And a lot of organizations, because they didn't know how to set it up within their accounting system, whatever accounting system it is, if it's QuickBooks or Aplos or FreshBooks or MIP, all of those software systems, accounting systems, have the ability, you have the ability to separate money coming in and money coming out by program or fund source or any number of ways. And if you're entering the information in the system correctly, then you should be able to run reports that give you the information that you need. A lot of organizations were having to download a bunch of transactions and then go through and delete things that didn't apply to that particular funding. They were doing a lot of unnecessary work in Excel because their accounting system wasn't set up spending and income the way that they needed to. And so we're going to talk about the different costs. So different program costs. Direct costs are things that you can trace directly to the program or funder. So say you have, I don't know, 3 different programs that are funded by 3 different funding sources. Staff, an example of a direct cost would be staff costs. Even if you have staff that say maybe they're doing 50% in one program or 50% in the other program, that is a direct cost that you should be able to document and trace to the program, either by payroll. So they're logging hours, they're logging which program they work on, and when payroll is processed, is allocated to the appropriate program. In some instances, organizations just split it 50% one program, 50% the other program, and when they process payroll, it is recorded that way. So direct costs, participant costs. If it, a participant is in XYZ program, then any spending on that participant would go to XYZ. Indirect costs tend to be organization costs that then get allocated to programs or funders. It tends to be administrative type expenses, not necessarily program expenses. So things like rent, if you have a shared space, all of the programs are working out of the shared space, that would actually be considered an indirect cost that gets allocated across programs based on some predetermined allocation method. And we're going to talk about that a little bit more in depth shortly. Cost allocation methods. Oh, I kind of just talked through this without having the slide up. Direct costs are costs that are easily charged to a program. Again, staff time worked on a particular program, rental assistance paid on behalf of a client, or supplies for a specific program. Allocated costs are costs that are not easily linked to a program and are allocated for efficiency. Rental costs, supplies purchases that benefit multiple programs, payroll for the executive director, things like that are generally costs that get allocated or are considered indirect costs. Basic steps of a cost allocation. So when we talk about cost allocation, that means that this is an overall general expense that we're going to spread across program or funding sources. What we want to do is identify what the shared facility or service is, identify the cost to be allocated, determine the factor that you're going to use to do the allocation, and then allocate the cost, and then update and monitor as needed. So an example would be, let's see. So for payroll, you could allocate payroll again based on, you can allocate expenses based on FTEs, office space. So let's go with office space, because you could do this a couple of ways. Office space, you could do based on the number of programs that you have. So again, if you have 3 programs plus admin costs, then maybe rent would be split 4 ways. Or if you have 10 employees, you have 3 in program XYZ, 4, 3 in program A, 4 in program B, and then 3 in program C, and then some admin staff. You could take the cost of rent and allocate it based on the FTEs of each of those programs in the office. Does that make sense? Another way that you could do allocation is based on square footage. So in that same example, if you have an office space with multiple offices, you would do the total square footage and then the square footage for program A staff, program B staff, program C staff, and do the allocation that way. A common way to do IT expense allocations, again, would be based on FTE or the number of computers that staff has. So again, in that example, you got 10 staff. Program A staff is 3 computers, program B is 4, program C is 3. Then you could allocate your IT costs that way across those 3 programs. There is a spreadsheet that I wanted to share that I'm going to send this when I send out the documents. This is kind of this is a personnel allocation worksheet that I've used before. So it lists the positions, what the annual salary is, what their FTE is, and then based on programs, it does the allocation. So maybe 20% program 1, 20% program 2, and then 60% is going to general operating. And what happens is each payday, their payroll is put in here and the allocation is done. And this is what the organization was using to do their payroll journal entry. They were using this this type of an allocation. This is an example of rent, again, split evenly across the programs. So there were 6 programs plus general operating. Rent was $2,500, so rent just got split 7 ways. This was one based on the number of computers. So this was the total cost. There was 12 computers in all. This program had 3 people. This program had 1. And so this allocation was done. The thing about allocations is there's not necessarily a right or wrong way to do it, but whatever method you decide to use, you need to document it and then you need to consistently use it. And then anytime that it changes, so say you started with 6 programs and then 3 of them ended. And so now you only have the 3 program plus Gen Ops. So then now you need to redo your, you need to redo your allocation. And you just need to document the change, why you made it and when it went into effect. One thing to note, again, something that I was asked to share is you can't just take your budgeted amount and divide it by 12 and bill it. It has to be the actual cost. So say you budgeted $100 a month for cell phone expenses, but for whatever reason, maybe you got some type of a discount or something, so your cell phone is actually only $75. You can't just bill your budgeted $100 a month for cell phones. You can only bill what your actual cost was. If that hopefully that makes sense. Any questions? Because I think this is another area where some organizations struggle. They don't have written allocation policies, which is something else that's becoming a requirement, and that both the county and the city actually are starting to ask for written allocation plans. Any questions or comments on this? Valerie, you have anything you want to add in this area?
Not really. You did a great job.
Okay.
I think what I might add is I've seen sometimes where with budgets, right? A provider has 3 grants and the grants have like allowed different budgets for indirect costs. That's not an appropriate cost allocation, like a methodology basis, based on what the funder allows. It's more, you have to have some kind of central way of documenting like the usage or something based on your program operations that defines like how you allocate those costs, and then you get to allocate them up to your program budgets. But just wanting to name that it's grounded in usage, like how much space you're using, how much IT services you're using in your organization for the work of the contract.
Okay. Awesome. Susan, you had your hand up?
Yeah, I tried to keep it as simple as possible and use the same allocation method as often as possible. So what I like to normally do if I can and it's reasonable and it makes sense is to go by the personnel, like their level of effort. So if we know that they're spending 60% of their time on a certain program, then I think if like the rent comes in or storage or any kind of ongoing IT expenses, let's say like Google, then I think it's reasonable that their portion um, of their time get allocated by that. Do you think that's reasonable to go by the employees and how their time is allocated? So then that would cascade down to those other indirect costs?
So yeah, so that's an example of using FTEs as your base for your allocation.
Okay.
Yeah.
So like you think that that would still be okay for like facility operations and maintenance or information technology, those last two items?
Yes.
Yes, okay. Yeah, I didn't know if this meant that like um specifically for information technology that what's listed there is the preferred way
Oh,
or
no,
to
no,
guide
no,
it.
no, no. Thank you
Oh,
for saying that. No, these are just examples. These are just examples. So if you are using FTEs as the basis for your allocations, that is a perfectly allowable way to do your allocations. These are not etched in stone. This is how you have to allocate this type. So you don't have to use the number of computers
mm,
as the basis for your IT allocation. It absolutely can be based on FTEs.
okay. Okay.
Yes.
Thank you.
Thank you. I'm glad you asked that in case I confused anybody else with that. Is that Hadar?
Yeah, the second version is correct.
Oh, thank you.
Thank you very much. I just am wondering about something that I cannot see here is the health insurance. Will that be a direct cost for the program? I really like would like
You
to have
mean
some,
benefits?
yeah, like benefits like health insurance.
Yeah, I mean that would it so the benefits allocation should, I would think, would follow the payroll allocation. So if a person is 100% allocated, so they spend 100% of their time on project A, then their benefits should be allocated there as well.
And is that
Or
the
if it's
full?
split 50-50, then if their time is split 50-50, then the benefits should be split 50-50.
Oh, okay.
I will say the thing that I have seen and organizations are getting better at it is they wouldn't include the cost of health insurance and stuff like that in their budget. They will only put the payroll cost, and so then they wouldn't have the budget to cover the health insurance, and they would have to cover that somewhere else or get a revision to their budget, which means they'd have to pull money from somewhere else in their budget to cover those costs. So yeah, it's definitely as you guys are doing budgets, to make sure that you're capturing all of your fringe benefits in your payroll cost.
Thank you.
You're welcome. Let's see, it says our staff are required to use daily activities tracking on spreadsheet for time spent on different projects and staff time allocated based on actual time spent on funding sources. Yeah, that's great. I mean, um, most organizations do that. So that is definitely do some what that means a lot of times though is the allocation each pay cycle is changing, but that's perfectly fine. There's nothing wrong with that. You don't have to do the kind of preset allocation and just use that throughout the year. If your people track time that precisely, then doing your allocation that way is great. Let's see, could you talk a bit about the difference between indirect costs like rent versus the indirect percentage that we all include across our full contract expenses. I would say the major difference there is how your budget was set up. So in your example, I've seen budgets that are just payroll cost and program cost and an indirect cost. There is no budget line item for rent. In those cases, your rent has to be covered by your de minimis indirect rate. So it would have to be covered, whatever portion of your rent that is allocated for that program would have to be covered by that your indirect rate percentage. Whereas if your budget allows for rent, then you directly expense that to your rent line in your budget, and then your indirect percentage rate goes to other overhead costs that aren't directly billed to that grant, if that makes sense. Who asked that question? Danielle, did that answer your question?
Yes, you did. Thank you.
Awesome. Yeah. Yeah. So I mean, again, I guess, and that goes back to the same thing I said about benefits. A lot of times when organizations are doing their budget, they don't include a rent line item. I mean, and that's something that could be a direct program expense versus having to eat into your indirect percentage rate to cover that expense. And I mean, unfortunately, I know sometimes budgets are tight, so that's not always doable. But if there's room, then it makes sense to make it a direct expense in your budget versus being covered by the percentage. So Sherry asks, I would like to know more about indirect has been submitted, but the IRS, we have been told we can't claim. I'm not sure who is telling you you can't claim the de minimis without the federal rate. Because that's kind of the point of the de minimis. Our grant representative has denied it. Yeah, I'm sorry, I'm not sure about that one. Sherry, Valerie, are you able to speak to that at all?
Well, I'm curious, Sherry, are you in DC? Do you have a contract with DCHS or Public Health? Oh, with both. Okay. Because technically that is a federal indirect. We aren't required to accept federal Dimin 10 for county funding, but I would say if maybe reach out to me after and we can find out what's happening specific to that. So I'll drop my email in later so that we can address your contract concern. Separately, just saying back to the usage of maybe like an FTE allocation across all of your indirect costs. I think I would just name, I've had a case as an illustrative example where somebody had multiple programs, but maybe one of their programs was using like 80% of their IT's time because of the IT requirements of it, or, could be similar for finance staff is really dedicated to someone with a lot of complex federal funding versus a program with more unrestricted funding. So I would just say those are the kind of things that I would encourage you to think about for your cost allocation. Is, does it make sense, right? Is actually how somebody's charging their time across programs, is that also the kind of services or indirect costs in your organization, does it make sense, right? So that's why it's very, Deandra's doing like a really good job, and that's why cost allocation is really hard to speak specifically of what's best for your organization, because it's really depending on how your organization is set up, what programs you have, and what you're doing. So that'll be our plug. I'm sure we'll have another plug, as there is free capacity building available to support you with cost allocation. That's all I have.
Wonderful. Thank you. I appreciate that. Any other questions on allocation methods? I think we've gone through a lot of this. I've talked about the hire letter with the annual or monthly or whatever time frame. So annual, what, monthly, bi-weekly, or semi-monthly, whatever salary or hourly information should be listed in the offer letter. The same with contracts. So this was another thing. When you're doing subcontracts, making sure that the payment terms, the amount and the payment terms are listed in your subcontract. We talked about pay stubs and direct deposit information. Again, matching the timesheets and whatever is in the offer letter. And then anytime there's a job or a wage change, making sure that that's documented somewhere as well. So if someone changes positions or just gets stays in the same position and maybe gets an increase, to make sure that that is documented, because those are the types of things that they ask for when they're doing their fiscal review. And all of that stuff needs to match and line up. Let's see, we've talked about records retention. I showed you the financial statement submission in the contract. We talked about subcontracting agreements briefly. The thing I want to point out, and I think sometimes people don't realize, is there is language in your contract that says subcontractor agreements are supposed to be approved by the county. And I don't think a lot of organizations are doing that, and it's actually caused some pretty big problems for a couple of organizations that I'm aware of. So if you're doing subcontracted agreements, you want to make sure that you are working with your program staff at the county to make sure that they are aware of those agreements and that they've been approved. There's also language in your contract that says you're supposed to pay a living wage to staff, and we're going to look at a couple of tools to help you determine, what that may be based on various positions and size of the organization. And then expense eligibility. You want to make sure that you understand what expenses are allowed by your contract. Again, a lot of that is going to be driven by your budget and making sure that you're working with your program manager to make sure that you're not spending on anything that's ineligible. And then we're going to mention the Washington Nonprofit Handbook is a great resource for all of the things that we have talked about. When I share resources, I'm going to share the latest one of those, but it has a lot of great information in it around fiscal responsibilities for nonprofits in the state of Washington. Let's see, CC asks, is there a difference between a subcontractor and a guest facilitator? A guest facilitator is a one-time 2-hour presentation to students. Yes, I think there is a difference. Valerie helped me with this. I think a subcontractor is someone that's going to be doing like a portion of the contract scope of work, right? So not necessarily somebody that's coming in as a guest speaker, but somebody that's gonna be performing a part of the scope of work of the contract?
Correct.
Yes. Okay, good. Did that make sense, Cece? I'm
Correct.
trying to
And
think of an example, but I
we
don't
have
want to
a
say something
definition in the
wrong.
contract I would use.
I'm sorry, say that again. I
I'm
don't know.
sorry, I don't know if you can hear me. Am I going in and out?
Yeah, you're going in and out.
Can you hear me?
We can hear you, Valerie. And, she said that there's a definition in everyone's contract about what a subcontractor is.
Oh, okay, awesome. Is that you, Georgie?
It is. Hi.
Thank you. Recognize your voice. Didn't see you on here. Great. Thank you for that. Rachel asks, what about a contract where the sub is involved in grant support work but isn't being charged to the county? I think if it's not being charged to the county, then it doesn't need to be pre-approved. It's just anything that you're going to be looking to get reimbursed on for subcontracting work, correct?
Right. I mean, it might be great for the organization to have that kind of contract in place between you and whatever subcontractor you have, just so that you're both on the same page with each other. But if you're not asking for reimbursement from King County, then you won't be required to submit that.
Yes. Awesome. Thank you for that. Oh, I know what I wanted to do. I wanted to show you. So there is payment of the living wage, something that I have shared in prior meetings that I want to share today is the 501 Commons does this wage. Where did it go? They do this wage and salary benefit nonprofit wage benefit survey report. The last one that they did was, well, the last one that's been published is 2023, waiting for the 2025 report to come out. I thought it was supposed to come out last month, but it looks like it's not out yet. But they also now have this handy tool where instead of flipping through pages of a PDF, you can actually come to this site and you can search for a job. This is pretty cool. So an accounting manager, and it will, oh, I must have two things. It's giving me director of finance and accounting manager because I did director of finance earlier, but it will tell you based on the position what the average salary is, the 10th, 25th, 50th, 75th, 90th percentile. So this kind of gives you an idea of a salary range for that position. And then it goes further based on your budget, the organization budget. So they surveyed a bunch of nonprofits and got this information. So an organization between $2 and $5 million, an accounting manager average about $92,000. 76 would be low 10th percentile, 83 would be 25. And once you get to the 109 or 117, you're up at the 75th or 90th percentile. And so a lot of organizations are using this as they determine the salary ranges that they're going to be offering for positions within their nonprofit. And it used to just be the physical book, but I really love this little tool now, because you can just find the position and go directly to it. You don't have to scroll through hundreds of pages to find the position that you're looking for.
I have a question.
Yes.
What does it mean if on the tracker you put in your budget, you have a small budget, but you got big titles and there's nothing there, like there's no data there? What does that mean?
It just means that they didn't get any, when they did the survey, that they didn't get any respondents for that position at that level. So
Okay.
even the one that I just did, so like an accounting manager for less than 500,000, you see it's all blank. That just means they didn't get any responses at that level for that job title.
Would it be safe to say that like where you see 83K, and if you're on the less than 500,000K, to bump that down a little bit, like, guesstimate or estimate salary around that?
You could, I mean, and then there's other tools also that you can use to get an idea. I mean, this one is really helpful, but if it's not here, I just drew a total blank. There's another resource that you can use that's similar that will give you salary ranges for different positions. Is escaping my mind right now, but I'll remember it and include it in the resources that I send.
Okay, thank you.
You're welcome. I mean, so this is great, but I mean, again, you see it is not all inclusive. It's a good start, but there are other tools that you can use out there as well. Let's see, go back. I think that was it. Do we have any questions? Questions on anything? Questions, concerns, something that you thought we should cover that hasn't been covered? Oh, thank you, Georgie, for dropping that link. I appreciate that.
My pleasure.
Let's see, and Valerie says, I believe the state of Washington publishes regional annual ranges. Valerie, do you know where that is? Where that resource is?
Oh, I'll have to find it.
Okay.
I know the state relies on it for budgeting, so I'll have to tag it and get it in the chat. Hopefully you can hear me now. It was kicking me
Yes.
out earlier.
Not a problem. Let's see and make sure I didn't miss any questions. Oh, yes, Abdi, a sub performs substantive work that is part of the funded project's core objectives, right? They're not just providing a service, they're helping fulfill the grant's mission. Yes, that is a great, yeah, that sounds right. Let's see, Olga says Archbright has a nonprofit salary range report for our area. And for those of you who don't know, Archbright is an HR support organization. They have a bunch of great resources, trainings, really great organization. So yes, thank you for that, Olga. And then Vince looks like he put the post-training survey link in the chat. For those of you that have time, looks like we're going to get about 15 minutes back. Maybe you could take time to go ahead and do the survey. And then once the recording is done downloading, I will send it and all of the resources to Vince. And he will get that out to everybody. Do we have any other questions before we sign off? Vince, do you, Valerie, or Georgie have anything you want to add?
I mean,
Just-
thanks. Yeah, sorry, go ahead, Vince.
Yeah, I just wanted to say thank you. Thank you so much, DeAndrea, for joining us today and really sharing your wealth of knowledge and expertise with us today. And I think you had really specific examples from your material and resources. So just huge thank you. And also shout out to Valerie as well for representing the business and finance team and joining us today and answering your really thoughtful questions. So yeah, as DeAndrea was mentioning, we'll be sharing the recording and any follow-up material and resources in a email in the coming weeks. So thank you all.
Wonderful. Thank you, everybody. Have a great day.
Thank you. Thank you.